Listen to me, please.
Thank you so much, Zoe, for joining me today and finally agreeing to tell us about your experience of sustainability in business, covering some aspects of HSBC's own sustainability journey and also sharing how the bank is helping its clients in this area. And before we get started, would you mind telling us about your background and what your role at HSBC currently involves?
Thanks, Leila, and I'm delighted to be joining you for this conversation. So I lead the Centre of Sustainable Finance at HSBC, and we set this up 3 years ago to serve as a think tank for HSBC and its clients on issues related to sustainability, but mainly climate change. So we really look at two key factors that are important for solving the problem. One, what does the decarbonisation pathway of the real economy look like? And that's one of the reasons why I participate as a commissioner in the Energy Transition Commission. And then the second part is about how we mobilise finance to really deliver an economy that is fit for purpose in the future to address climate change. So within those two topics, we do a couple of things. We work with external partners on identifying knowledge gaps and overcoming barriers to mobilising finance in that space. And then we also work with our regulators and others to think about how the financial system can approach solutions for climate change.
Thank you. So you have been working in sustainable finance for quite some time, and I'd like to start the interview with what may seem like an obvious question. Why does sustainability matter? What does science tell us? And how are governments and policymakers responding to this issue?
It really is a risk and an opportunity factor. So for all of the businesses that we bank and the clients that we serve, there are issues within their business models and their thinking about operational sustainability that affects the way that they do business. So we also ran a survey just recently which found that 85% of our customer base within our commercial banking business think that environmental, social and governance issues are important. But more than that, it affects performance. So our global research team found that the stocks that derive 10% of their revenues from climate related themes, they outperform the global equity benchmark index by around 5%. So there's actually a financial performance case as well as to why you would want to look at sustainability.
So clearly it makes good business sense to embrace sustainability, not only for companies, but obviously for financial institutions as well. And HSBC is recognized as one of the leading banks in the transition to low carbon. And can you please tell our audience about HSBC's approach to sustainability and share some examples that make HSBC stand out?
Of course, my pleasure to do that. So what we've done is taken a holistic approach to sustainability factors. And by that, I mean, we look at our operational footprint. So we've made targets about how much renewable power we'll source, how we reduce waste in our offices all over the world, and how we help our employees reduce their through mitigating travel and so on. And of course, within the COVID period, the emissions related to our travel have obviously come down significantly. So the first pillar of the strategy is that net zero enablement. The second part is supporting the customer through that journey, because of course the most important thing is that our customers can develop future roadmaps that bring them prosperity, but also help with the climate crisis. So supporting our customers through their transition is a key factor of what we need to do to help them going forward. And then lastly, the third part of the strategy is around climate solutions and innovation. So all of those three factors add up to a holistic approach in thinking about how HSBC as a whole, i.e. across operations and its business model, can adapt to thinking about the climate of the future.
In your view, which industries are more critical to the transition to net zero emissions, and what role does HSBC play in helping these industries tackle the challenge of climate change?
as you mentioned, I've been looking at this space for a long time, and the core climate solution hasn't changed at all in all of that time. It's about decarbonising the energy system, and it's about becoming much more energy efficient and energy productive in the way that we produce GDP and produce our economic activity. What's changed is that the problem has become so serious now that we really have to think more broadly than just the power sector and just renewable scale up. We really need to be active across industries as a whole. So that's cement companies, steel companies, manufacturing, our transport network around shipping and aviation, and work with those customers on how they think their decarbonisation roadmaps look like in the future. And this is one of the reasons why the Energy Transition Commission is so important. It's because if you're an industrial company, there's a lot of work to do to figure out the correct roadmap. It might mean investing in new areas like carbon capture and storage to capture emissions. It might be building new hydrogen networks to change process in industry. And so those new ways of thinking mean that we need to be able to work alongside our clients to deliver what they need. So the high climate impact sectors are of course important, and they're the areas that we're looking very closely at. One initiative that we have also set out in our new climate statement is some financing that is explicitly supporting transition areas. So we want to provide between 750 billion and 1 trillion of sustainable finance within both those pure play areas that we've been looking at for a long time that are captured by green bonds and green loans, but also more increasingly towards those transition areas of industry which may be still serving the old economy and the new economy, and they need a lot of investment to transition.
Thank you, Zoe. That's interesting. So clearly, when we think carbon emissions, we see the larger companies in those carbon-intensive industries that you just mentioned. But we know that's only part of the picture. SMEs and consumers are also an important part of our economies. And it would be interesting to hear your views about how low carbon will impact them, and how are their behaviors and needs changing, and how is HSBC adapting its services to support these market segments?
Yeah, it's a really good point, because a lot of the headline grabbing news is from the largest corporate, but actually their supply chain, for instance, is also increasingly impacted because larger corporates are being pushed by shareholders to account for emissions all the way through the supply chain. And so one of the things that we've done to address that is help suppliers by providing them with sustainability-linked lending, for example, where the rate of interest is linked to a key sustainability-related KPI. And that just helps drive a holistic thinking across the supply chain and across different networks. The other thing that we've done is launched specific products like green loans that historically the green labelling system hasn't been applied to smaller entities. But because of the work that the market did around green bond principles, we could use those best practices to translate it out into a wider product suite. And that really helped with bringing transparency to the financial flows that are supporting the true transition. I mean, I'm sure one of the things that people often ask about is the fears around greenwash of finance. Are companies really doing what they say they are in terms of decarbonisation? Well, one way of countering that and looking at it more comprehensively is transparency of use of proceeds in capital. And this is one of the reasons why the transition labelled finance area is one to really watch closely and look at in order to really see how fast the financial drive transition through its capital allocation.
So we've discussed how businesses and consumers are adopting change, and also how banks are supporting the transition. What role do governments and policymakers play alongside businesses and consumers to fight climate change and the broader sustainability issues? Is it mostly about incentivizing change, mandating it, or a combination?
We all know that no one set of the system is going to be able to do this on their own. So whilst we've seen a trend over the last few years of every part of society stepping up, whether it's individuals, corporates, or the financial system, governments, as you say, also have to provide the signposts that they are willing to put incentives in place, whether that's renewable energy targets, whether that's financial incentive schemes like taxes and subsidies in the right place, whether they're willing to implement carbon pricing mechanisms to actually move this agenda forward faster. Because, you know, the scale of the problem is huge. We've got to halve emissions over the next 10 years to be on track to keeping temperatures under control. So government plays a massive role in the speed of transition. The quicker governments implement the signals by policy that they are committed to decarbonisation, the faster investors and financial market participants will believe that change is about to happen, and then adapt business models, adapt financing, adapt the risk-reward profile accordingly.
Definitely a lot happening and to happen in this area. Looking at the recent and upcoming regulatory changes around sustainability for banks specifically, what are the key challenges and how is HSBC dealing with those challenges?
It's really encouraging that central banks have been taking the issue seriously, as well as regulatory authorities in the last 3 years or so. The challenge for the banks is the data requirements related to emissions in particular. It's the knowledge gaps around how the risks of climate change might play out in a way that is relevant for each individual institution. So, for example, we know that the Bank of England is looking at stress testing for climate risk, which is an incredibly important area to look at. For a bank like HSBC, which has a global footprint and has customers in many different regions, but also its own operations in many different regions, assessing areas like the physical risk related to real estate, for instance, in a particular region, need different data requirements than measuring emissions from high climate impact industries, for example. So one of the things that we've done over the past couple of years is issue customer-specific dialogues around climate risks and trying to engage our customers quite early on in this journey so that we can have a dialogue about climate rather than a sort of a regulatory-driven approach. And that's worked quite well. We've still got a lot of work to do on data disclosure about emissions, and we've still got a lot of work to do to figure out how climate risks will play out across different loan portfolios, different geographies, and different exposures. But for sure, what we've found is that just the fact that stress testing is coming from central banks means that our employees can have a more comprehensive conversation about it. We have to start thinking about how we operationalize the risks related to climate. And before now, you know, there's an exercise on knowing what they are, which is relatively straightforward in terms of types of risks, but the difficulty comes from how they're actually going to manifest and what the signals are going to be to make them manifest, whether those signals are policy or carbon pricing or changes in consumer behavior. Of course, going forward, we all need to move at pace. And the fact that the regulators are asking us to look means that we can move as a coalition rather than trying to rely on one or two leaders to take this forward and all the rest to follow.
As a final question, on behalf of my fellow partners and colleagues at Mazars, what advice would you give us when it comes to engaging with our clients on questions of sustainability?
It's a really good question, and we've been on a long journey to engage with clients on the sustainability issue. So I think one of the most important things is to understand some background knowledge around how sustainability impacts the industry that they're in, but similarly to listen to what their individual approaches are to thinking about sustainability and climate change in particular. Because what's been interesting for us is hearing the diversity of approaches across the same sector, and really understanding that, you know, whilst there are things that everybody can do, like every company can pledge to use renewable power in its operations, and that's a very nice, straightforward thing to be thinking about. In terms of the business model itself, that takes a little bit more thought. If companies are providing services to high carbon industry, it's about thinking what their roadmap is to address that in the future. And it may well be that they introduce new products which give them growth opportunities, and they might need advice on the markets that are better positioned to welcome those new products because of government policy or regulatory drivers and those kind of factors. Or it could be that they want to know more about the different investor initiatives that are driving change. So for example, for me, some companies come and ask, you know, why is the financial system asking me all these questions? Why do you need to know? And the answer is that our stakeholders are asking us as well. We need to understand exactly well placed our clients are for thinking about the opportunity set related to sustainability, as well as any different risks that they might face.